Have you ever noticed something strange happening in the world of silver? You look at the price on your screen, the one set by big exchanges like the COMEX, and it tells you one story. But then you try to buy an actual physical silver coin or bar, and the price you pay is completely different. This isn't just a small gap, it's a growing chasm between what's called paper silver and real, tangible silver. Today, we're going to dive deep into this disconnect, explore the powerful forces at play, and discuss what this could mean for the future of silver in your investments. So, what exactly is this paper silver we're talking about? Think of it as a promise, a contract that says you own silver, but you don't actually hold it. These are futures contracts, ETFs, and other financial instruments traded in massive volumes every single day. They are incredibly influential, setting the global spot price of silver that we all see. The problem is, the amount of paper silver being traded far, far exceeds the amount of physical silver that actually exists and is available for delivery. It's like a giant game of musical chairs, but with trillions of dollars worth of promises and only a fraction of the actual metal to back them up. For a long time, this system worked, more or less. Most traders never intended to take physical delivery of the silver. They were just speculating on price movements, closing out their paper contracts before they expired. But lately, things have started to change. Demand for physical silver is skyrocketing. We're seeing it from industrial users who need silver for solar panels, electric vehicles, and electronics. We're also seeing a massive surge in demand from individual investors who want to hold a real, tangible asset in their hands, something they can trust in uncertain economic times. They aren't interested in paper promises. They want the real deal. This is where the disconnect becomes a serious pressure point. Major bullion dealers are reporting record sales and struggling to keep up with demand. Mints around the world have had to limit production or have sold out of popular coins entirely. When you go to buy a Silver Eagle or a Maple Leaf coin, you'll pay the spot price, plus a significant premium. This premium is the extra cost for the real physical product, and it's been getting higher and higher. It's the market's way of screaming that physical silver is much scarcer and more valuable than the paper price suggests. What's causing this squeeze? A few key factors are converging. First, the industrial demand is relentless and growing. The green energy transition is incredibly silver intensive. Second, there's a growing distrust in traditional financial systems. With inflation high and geopolitical tensions rising, more people are turning to precious metals as a safe haven. They are pulling their money out of the paper markets and demanding physical delivery, putting a real strain on the vaults that are supposed to back up all those paper contracts. Think of it like a bank run, but for silver. If everyone with a paper claim suddenly showed up and asked for their metal, the vaults would be empty in a heartbeat. So, what does this all mean for the future? If this trend continues, we could see a historic event where the paper market loses its credibility. The price discovery mechanism could break. If the big exchanges can no longer deliver the physical silver they've promised, confidence could evaporate overnight. In that scenario, the price of physical silver would no longer be tied to the paper price. It would be determined by pure supply and demand in the physical world. And with demand soaring and supply tight, the price could be dramatically higher than what we see today. We could be on the verge of a major revaluation of silver, where its true value as a finite, essential, and tangible asset is finally recognized. The widening gap between the paper and physical markets isn't just a curiosity, it's a warning sign. It's a signal that powerful undercurrents are reshaping the silver market right before our eyes. Thank you for watching. If you found this analysis insightful, be sure to like this video and subscribe to our channel for more in-depth content on the markets. Let us know in the comments what you think about the future of silver. We'll see you in the next video.